This is your daily market recap for Thursday, June 16th, 2022. Let's go.
Hey everyone, this is my channel to help investors and traders develop a probability-based mindset to succeed. Also try and keep friends informed of what's going on in the markets and the economy, and also a little real estate content as well.
This is Dan Max at EXPI Realty, aka the Trading Agent, and this is your daily market recap for Thursday, June 16th, 2022. Hopefully you're having a good week. If you are newer to the channel, please check out previous videos, a lot of the back to basics educational videos. People, hopefully, if you're following, I know for a fact, are doing really well. We anticipated a lot of the weakness in the market. We're rolling into oil shorts. We got a lot of things going on. And one of the things that I love to do is make sure people understand the why for a trade. And if you don't know why we're doing something or why we might recommend it, stop by the Discord room. Hopefully this video in itself will give you plenty of evidence because, again, we are probability-based traders based on evidence. We do not gamble based on our emotions and feelings. For every trade, there's a reason, and I hope people who are learning to trade or even have been in trading a long time, if you've found yourself up and down, I'm telling you, the difference usually is some sort of evidence-based way of trading differently, meaning like you're doing something wrong. You're going all in on your entries. You're not able to scale out of things. There's one little missing piece, and I know a lot of people, especially myself for a long time, had that serious one issue that I just would replicate in different areas of trading. And once you figure them all out, trading actually can be pretty easy. Again, follow me on Twitter if you want to see some of the live picks that we drop during the day. Never ends. Bitcoin. Said this is a head and shoulders top. Talked about this lower high, and then we talked about holding here and had to hold and it failed. Now we're at the next chop zone. I struggle with Bitcoin because I don't personally own it. It literally had a bigger move than the tulip bubble, which doesn't necessarily mean it can't go higher long term. Because again, digital currencies, I mean, there is some future in that. Let's not argue about what that is. But is it Bitcoin? That is the question I do not know the answer to. I do not have a crystal ball that I am reliable, that I feel deemed reliable enough to call that. So you have to trade the levels, you have to trade the action. We've said this many times. If you don't hold the 20,000 area, you're probably getting somewhere back to what, the 15,000, I guess 13,000 range. I honestly think that you might get below 10,000 because knowing Bitcoin, how it loves to just blow everybody out, under 10,000, I imagine there's a ton of people who'd have stops there. So that's what I'm thinking. Oil. This is the short of shorts. We are rolling into this with the TLT buys. We are buying bonds. We are shorting. Not really shorting. We are betting on lower interest rates. And the TL and oil is the first thing that we need to see to confirm it. Think about it. If inflation is peaking, now again, this is not a forever trade. If inflation is peaking near term because of demand destruction, actually going into a recession, oil is not immune. If you're not aware of such facts, then I don't know what to tell you because you need to stick around and make sure you watch the end of this video because guess what? There's a lot to be, we're going to unpack it all. So let's get into it. You stick around because there's going to be a ton of information about oil as we get closer to them because I want to stack it all together. But I like going through the futures at the beginning just to be safe and explain to you guys, hey, we're back at the channel highs, not surprised. If you actually look at the USO, it's a 20-day. We could bounce, but I think the top is in. You've got a lower high. You got demand destruction. The economy is falling off a cliff. Near term, again, as I've said a million times, the band of thieves, OPEC will, as long as they're still using dollars to collect, sell oil in, then they will do their best to lie to each other, literally, to get the sales in. They're all poor countries. They're not going to underproduce when the dollar is strong and oil is high. They've never not done it. You know what I mean? TLT, here we go. We put out a bunch of alerts. If you're newer to the channel and you're thinking, like, what are you talking about? Check out TLT. I mean, again, I put out a bunch of stuff during the day. Oh, I need to refresh it. I apologize. Check it out. We've talked about the 108s, 109s. Check the previous videos as well. I think you'll find insight in how to navigate an actual entry into this stuff. Because, again, when people talk about how you get into TLT, where is it? Anyway, it is what it is. Check out the Discord room or stop by my Twitter account. We talked about this action down here. A novice gap, meaning this might take a couple days to play out. Everybody in the world is bearish bonds, right? Yields are going higher. usually everybody's wrong. It's the same thing as the reason why you short oil, and they kind of coalesce in a pair trade if you think about what's going on in the world right now, because the only way people would buy bonds is if they think inflation is peaking, and the only way that inflation peaks at this point is what? Oil prices turn over. Because there is a thing called demand destruction. If you're not familiar with it, again, stick around to the oil discussion. We're going to get into it deep, because I'm going to try to get into some weekly, monthly targets so people know when to start taking profits. And so if you're buying TLT, congratulations. We were buying it at 108.20, 109s, 109.30, 109.60. Look at that close. Now, again, where's the first resistance? It's going to be filling the gap, obviously. 112s. So if you have any questions, again, stop by the Discord room. But please do not chase. We talked about the first bottom. We took a trade in it and got out. And reason, again, things that are fairly smooth and not as volatile as, say, some of the other stocks and names. Don't be surprised during OPEX if you get a lower low that leads to higher prices. It's a washout. We talk about this all the time. End of the month, OPEX, big news can usually trigger reversals. The Fed's raising 75 basis points to me. Way too much. Gonna put the market into a recession. But the great thing is that they really want lower rates. Remember, fiscal deficit cannot be... It just cannot be serviced. The debt cannot be serviced if we get higher rates, literally. The dollar, we talked about this. Now, again, one day doesn't make a trend. I've told you guys, I think we're about to break out of this channel to go to higher highs. What does that mean near term? I'll probably pull back. Probably forming some sort of cup and handle. If I had to guess, let me draw it out real quick if you don't know what a cup and handle looks like. Here would be your cup. And here's your handle to lead to higher prices. That's my guess. Because again, in a recession, people demand dollars. When the debt is destroyed, people want to delineate their debt destruction, and they're going to sell in dollars. That's so globally, people are just going to want dollars. I think that's kind of traditionally how it's always been. Now, does that trade unwind? Everyone thinks the dollar is going to get destroyed someday, or it's going to lose its current, like, king dollar respect. You know what? I'm not going to argue that it won't, but let's just not assume it will until it does, because that's really hard. And again, because you could stop out if you went long dollar and it went lower, but that's just really unrealistic to believe. Again, betting on the end of the world is really hard, because if it doesn't end, you don't really make any money, and if the world does end, what's there left to? What are you going to be left with? All right, next, the VIX. We talked about it. We said it. Look, it's going to hit the mid, probably pull back because it is OPEX. Remember, you're going to try to get some VIX destruction. Or volatility destruction. You pull back to the 20-50 day, we said was probably compressing before higher highs. Or if this bear market is going to play out and it needs to take, as long as it needs. Sorry, congested. Fuck, man, it's bad. I wouldn't mind the VIX just basing out, because again, if you study the past, which this is why I'm here to help you out, before the 2008 peaks in the VIX, look what you had, a lot of choppy VIX action, and you had a bear market. Check out now, again, the 2000s were higher, again, same thing, higher VIX, but remember, the VIXen wasn't around then. The volatility was in the QQQs, it wasn't in the VIX. But again, look at the levels. I mean, you at least have to figure a 48 spike to really even think about a bottom in the VIX, or a top in the VIX and a bottom in the market. We could compress for weeks, months, till the blow-off point. That's what I'd anticipate. Again, there's never been this much liquidity and margin in the market, and when it unwinds, it's probably going to be more of like a 2008 smash. And that's when you're going to buy gold, that's when you're going to buy your metal, that's where you're going to buy commodities, because they're going to come out of this in a bull market. Tech will not. And I've warned you folks why. And again, watch previous videos, check out the channel, stop by, I'll show you. Gosh darn. I'll give you the video that I literally put up in November that explained what was going on. SPY, what did we say? 3-day range, OPEX, gap down, be wary of pops. Now you broke the channel. This is where you could get the straight line velocity down move. The first major support would probably be 350, right? But if everybody's looking for the same price, I wouldn't be surprised if you filled. Let's zoom into the previous, man, because this is crazy. This thing went straight line move up. I don't think people realize how all that free money from the stimulus really pushed the market to highs that it shouldn't have gotten to. I mean, I think you could get down to 325 at some point. Maybe the best gap to probably consider filling would be 343. That's what I would look at. Now, again, does that happen tomorrow? No. Does that happen next week? I don't know. But I would look at, like, I'm putting that down in my, remind me, because again, I put notes, post-its all over the place to remind levels. 343 gap fill. I would look at that because, again, if you get to, keep in mind, like, the market's really good at knocking stops before it flipped. Like, here's an example. Right here, you took out the previous lows and then wham, you went higher. And again, think about that low was somewhere at 385, something like that. 385s, you got all the way down to 380, and then bam. Here's another example of knocking stops. You took out these levels, boom, you popped, boom, you did it again, and then you went. The market's really good at doing that. So if you're short the market and you're short certain things, please be cognitive of there's potentially a rally coming, and not that has to be monster, because could this be like an ABC down move? And again, everyone's like three legs, leg one, leg two. Could this be the start of leg three? Potentially. I've always said, no matter what happens, I really think the Qs are going to get absolutely murdered. Oh, Jesus, you can't drive this bus today. People are like, why would you say that? Well, let's look at the monthly. Let's look at history. Look at this nice smooth move and then parabolic blowout. I mean, it literally went from $25 a share to 409? 409. And there's a precedent for this. The last time the QQQ had a dot-com bubble, it corrected from 120 down to 20. So you do the math. It's a big correction. So big correction of this in the 400s. I'd say at worst you're going to get down to the 200 month and this old highs from literally 2009, or not 2009, sorry, 2001, 2000. That to me makes sense, but near term I would probably think somewhere in the 250s all the way to the old channels, which would be in the 210s. That's a wide range, but the market's not rational. So trying to predict the exact levels, because again, imagine you say the market's done going down and it just goes into full blowout mode. We don't know how low it can go, but we can know areas where people would probably be looking to buy. And somewhere near 200 would be probably a big buy, because then that would mean the Qs got knocked in half. Keep in mind, when you look at the monthly again, before the Qs died, you had a 120 down to 63 move. Oh, look at that. It was in, keep in mind, that was in, April of 2000. Look what happened. You got 50% down move, and then you rally back. Then that was game over. It's probably at some point going to rally back. That's what bear markets do. Now, again, how aggressive? It all really depends on the velocity of the down. If we keep this nice, like, down, up, it's going to take a while. Or you can blow out, bounce back, then the next leg. Because, again, I don't believe you'll ever see in the history of markets real long-term bear markets without some sort of retest. Because again, here's the first low, which is crazy, in 2000, and then you retested it somewhere in 2008. Like, that was 9 years. I know that sounds crazy, but even if you look at the 2000 bottom, you'll see it was wham, chop, chop, chop. You had 5 months, literally 5 months to bottom out. Check out, again, the SPY, because I want people to realize this. Like, when the bottom's in, the first bottom's probably going to be pretty volatile, and then you'll get a retest later. You had this wipeout in October 2008. Everyone remembers that's when all the carnage really started. You had a bounce, then you had a lower low, then you went higher. And again, that took 5 months. Here's the bottoms in the 2002, 2003. Look, I mean, it took 12 months, not 12 months, 1, 2, 3, 4, 5, 6, like 8 months at highs. Again, it took 8 months at top to 8 to 10 months. Like, do you see what I'm saying? Like, whenever the bottom is in, if you don't get the bottom, you're going to get a retest. That's why I always tell people, like, no matter what happens, say you put your money back into the market at a first major capitulation point, wait, because it could go lower and you'll probably get a retest. It's really that simple. So just be smart. That's all I ask. Just be smart, please. Don't get aggressively back into the market yet. Or don't even think about it. Like, we're not even close, y'all. We might probably be due for an oversold bounce, but we're not due for a bottom. Keep in mind, the biggest crashes are all when? Octobers. Why? Because it's mutual fund rebalancing. It's end of the year, quarterly, like, bonus action. Like, everybody is trying to get the fourth quarter right so they can get their year right. And if October is bad, they unload. Here we go. Channel lows. Probably due for a bounce, but could we get into the velocity down into the 150? I would guess 145 range. Yep. Gold. Everybody is just like, hey, you got to buy gold. And I'm just telling you, if the market bottoms near term, maybe this bounce, but people are going to absolutely unload gold because now the hedge is off, deflation, and it's going to go nowhere. I've said this a billion times. You got to wait for the blowout. Watch the previous videos. I'm happy that bulls ultimately win because I am a big bull. I mean, I love physical gold, I love physical silver. Paper game is so much different, and you got to remember that it's not rational. I really think at some point you get down to this 160 level. Now, again, if I'm wrong and I'm late, that's fine. I know this is a big cup and handle. Look at this thing. I mean, the handle, the cup in itself is $100, is almost $1,000 an ounce cup depth. And, when it starts, it's probably going to run up like it did in the early 2000s significantly. So when we get to that point, fine. And again, if I don't pick the bottom, I don't really mind being late on this one because, again, you got to get over these levels to even confirm it, but I still don't think you're going to get over it because, again, the market's just not going to be friendly to gold at this point. Remember, end of the quarter is coming. Markdowns, meaning if something didn't act well during the quarter, they're going to sell it. Well, based on when the I would say probably, where is it? Right there to here, this is down, it's probably going to get sold. Just remember that. It's not going to go in a straight line. Silver, same thing. People are saying, you're missing the bottom, high or low. I don't care. I just don't care. Because I know the best times to buy silver is wipeouts. Wipeout from COVID, wipeout from 2008. Wham, slam, jam, and jam higher. Same thing with the GDX, GDXJ, and all these miners. I love all of them. Again, where's the near-term target lows? I don't know. I tell that to people all the time. Like, the market's not going to be rational. Here was COVID. It went from 31 down to 15. Did gold drop that much? Nope. But the miners dropped 55%. So what's 50% from the highs? 46, 20s, low 20s? I mean, that's how you kind of have to calculate it. Like 50%, you might start wanting to take a look at the action. It should proceed. Extreme volatility usually precedes the next big move. Same thing with GDXJ. It's cool. It's holding the bottom. It just dead cat bounce. Some people are going to go, it's a W bottom. And we talked about that here. And then it made a lower low. Then it went. Please, seasonality is not in the favor of the metals at this point, and if you don't understand, you don't know why, that's fine. This is what it is. You got to learn the hard way. The best times to buy this stuff is when nobody wants it. And again, when I say nobody, you should go to Twitter and you literally will find crickets. Like, all those people who are like, buy gold, they're going to disappear. And it's sad to say because, again, like they're not really trading from a point of understanding the markets. Now, they're going to tell you all these fundamental reasons why to buy gold and silver. No one's going to argue that. But it doesn't mean it can't go lower. And again, it doesn't mean a bear market can't drag all these down. Hey, G, we told you to sell up here. You're welcome. We told you it's probably going way lower. People want to buy it. Just not interested. Let it base out. Let them take it to lows that it will never retest. That's what you want to see. AEM, again, this is a strong company. I'm glad it's bouncing. Hopefully, maybe the lows are 45. Maybe it's 38 area. I don't know. NFGC, here's a company. Again, Sprott's loading biscuits into this. Like it down here, but again, I like it better at 4. I like it better in like the 3s. Because again, if the bear market is a bear market, which it's showing a million tendencies of, what should it do? It should go way lower than it really makes sense. Same thing with PAAS. Again, these are all great names in the silver and gold mining. Remember, PAAS is silver, AG silver, AEM, AG, and NFGC are gold. Here you go. Lows. What next? I would say the same thing that I always say, Pinky. Just wait. Now, you do actually have a semblance of a channel, but you broke it there during COVID. I would say 13. Now, again, when these prices hit, I don't know. Please don't hold me to it. X, great. Steel's guiding up, but these companies are getting beat. We bought this at the 20-month. And again, I hate reviewing this every day, but I feel like I have to prove credibility so people understand we are evidence-based. 20-month up to 200-month, you got out. Now I said, wait, got up to 200-day, no one listened. People were like, oh, I got to buy it. That's fine. Now we're back down here. What now? Same thing as I'm telling you with VALE. Just wait. Wait, we need the market to capitulate. Same thing with VALE. I love these company. I mean, they're very diversified in metals. Love it. But wait. 13? Maybe we come all the way back to 11. I don't know. CCJ, again, I get so much heat from the uranium folks because they are passionate. They have a great fundamental case, but they don't understand how a bear market works. head and shoulders top. We talked about getting up in the 28s. You're like, ooh, you better roll up your stops. Boom, right back in the 20s. What price would I actually look at CCJ to buy? Probably around 16s, maybe 15s. Now, again, if it gets down there, do I have to be perfect? No. But here, I don't. Keep in mind, the reason why I tell people to wait is because I want the highest probabilities of straight line rallies with continuous up moves. Until the bear market has, I wouldn't say died, but gets extended, this kind of stuff is not going to rally strong. And again, you'll say, oh, 30%. No, I'm talking about the multi-100% move that's coming in this. That's what I'm waiting for, and hopefully that makes sense. Arrow, another great copper name. Put this on your wish list. Breaking the trend line, probably going to the 6th range. I don't know. Whatever. Just put that on your watch list. Mosaic CF, again, I love ag names. We need, like, food inflation's coming. It's going to cost more to grow it. I'd probably watch somewhere in the 40s, maybe the 200-day. Again, it's all predicated on what happens in the market. If you get the blowout, expect it. Expect lower prices. Now, again, at the lows or in the blowout, the market's not going to be rational. So we don't know exactly where the bottom is, but we can start fishing for it. We'll see signs. We'll see absolute signs. Same thing with CF. Love it. 20 days rolling over. 50-day. It's going lower. Look at the monthly. Go. Where is it going to go? Probably back into the 70s range. Zoom out. And you can see. It probably makes sense. Keep in mind, like when it popped up, it rallied back below the old highs. That's where I think you can get the 50 to 70 range. That, to me, right here would be the ideal spot. And then it probably goes up to freaking 350 or 400. Who knows? All right, let's get into tech, because this is the stuff that I'm just warning people. This is a bear market led by tech bear market. You don't want to own this stuff, because if you don't understand what happens in bear markets for tech, when they die, they get murdered. 48 down to $4, 90%. 90%, maybe even more, 91 or 2. Then it rallied, murdered. Look at this move. Now, again, people are going to argue AMD, I don't care. It's a bear market. It flipped over. It's gotten below the 20-month. This is a monster move. You are silly to think that they can stand this valuation and stay higher. This is why we shorted it. Now, again, we are less short because it has dropped a ton. And I've warned people, short, short, short. Shoulder line, that's why. Just, you gotta wait. You gotta wait for the big moves, because again, now you can short it down, but just make sure to take profits and wait for the reloads and pop. Apple, same thing. People thought I was crazy for shorting up here, thought it was crazy to short here. Now you're down at 130. Look at the monthly. Again, this is an exorbitant move. It has to be digested. It might take a decade. If we are in a recession, nobody is buying $1,000 iPhones. If anything, they're pawning them off for freaking flip phones. So now what? I got so many lines here. Let me just clean this thing up. I mean, you have to assume not the best case scenario, but it's a bear market. You have to assume way worse than good. Like, you have to assume, like, just as much as something could get exacerbated up, it could come down. Does that take you to the 80s? I mean, I would be willing to bet you're probably going to see a 50 handle. When? Not next week, not next month. Please don't hold me to that kind of craziness. Meta, same thing. This thing, tech is done. Tech is done. We've talked about this. Is at its channel low. It's probably due to bounce, but it's done this action, chop, 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 boom, gap. Going to be 1, 2, 3, boom. 1, 2, 3, boom. I hope people are paying attention. That next rally probably is the short, and it probably is what? On earnings, because again, these companies are overvalued times a billion. People are like, oh, it's trading at 17 times future earnings. You don't know what valuations are in a bear market. I see 1, 2 PEs. You see less than book value. Facebook is trading at a 17, 18 PE. Well, if why would anyone pay 18 times earnings when the earnings are slowing? You don't get bonus. You don't get bonus PE ratios when your growth is slowing negatively. We'll get in whatever. Roblox, here again, this is we called the bottom on this. VPA, again, if you study and you hang out in the room, you're going to learn a lot about it. The rally, now what we said, you gotta probably take profit. Now what? Wait for the 20s, low 20s. Someone's going to buy it out. I just don't know who it is. Microsoft, maybe? I don't know. Tesla. So many people want to buy this stock, and it's like you have to be high or really dumb, because you do not realize when a stock goes from literally nothing to 1,242 in a bull market, it's over. This is the Cisco of 2000. And again, it doesn't mean Tesla's going out of business, but the stock has to trade back to valuations of reason. I don't know what that's going to be. I've said it's always going to be, I think it's going to be sub 100 at some point. Not next week, not next month, but the bear market. I mean, you're under the 20-month, you broke the up channel, it's game over. Now people are going to say when it rallies back to 20-month, you were wrong. And it's like, no, you should be shorting. Who knows? Again, you can't pay me to recommend these stocks. I would feel like I am lying to everybody in the world if I said you should buy these stocks. Now it could go up 100 points tomorrow and someone will be like, oh, you should have bought that. I'm like, no, because that's when I should probably be shorting it. And that's all I'm going to say. Let's get into oil. Let's run through these and try to make this deep, but also important. Not surprised. We held the doji gap fill from 85s. We bounced. And what did we say today? Short to the pop. Short the pop. Let me update because again, I had very clear positions of why. 50% fib. We also talked about this whole level at 80. What was it? 80s. I mean, this thing went a lot higher, like 87s, upper 87s, and it went all the way to the 50% fib. Look at the volume. Look at the action. Wide and loose. Somebody was unloading in the last 10 minutes. What we will see tomorrow, I don't know. Remember, we usually see tops during OPEX. Here's the top, and here's like the confirmation of death. Get below the 20-day, and I've said this a million times. What's the fair value of oil? I don't know, but the USO, when oil pulls back, will probably go into the 60s. And if you're shorting up here in the 90 to 85 plus range, I think you're going to be happy with it because keep in mind, the USO is a deteriorating ETF. Look at the long-term chart. How to do reverse splits. If you look at oil at 150, it's nowhere close to the mid 5 or 600s. No, this thing is at 80. So short it away. If you're going to buy puts, give it time. But just remember, this thing's going to get absolutely bombarded, smoked. Now what? Doji potentially on the monthly. Again, there's the 50-month, 69. Maybe it gets down. And again, people are saying, what's the fair value of oil? I'm like, well, with demand destruction and OPEC, that again, they are going to overpump. Go check the inventory numbers. They're starting to build. Check the huge backwardation in the futures contract. Somebody's probably selling. XOP, let's do this one because a lot of people are wondering, where you got to go? Where's it going? We talked about the blowout top. Unfortunately, myself, some others bought drip up in these areas. We're back to even or either trading around it. Personally trading around it, taking drip to buy oil. Back to basically even, actually up now that I look at the account balances on one of my accounts. Again, I always put options in one account and then trade stocks in the other. Where is the next support? Let's draw the magic trend line. Let's just call it, I mean, no, there's already a yellow. There's already a red. Let's call it purple. Hey, somewhere probably in the 130s. Now, we talked about maybe this has like a, even down to 124. So let's draw a box for folks at home. I would anticipate somewhere down here. Then does it form this? Because Drew and I were talking about this the other night, and I think it's pretty logical what could happen here. Burnt. Burnt. Booyah. Head and shoulders top. We'll see what happens. Again, because what could ultimately happen is oil could get crushed, but these could hold up if the market rallies, just like it's gotten hurt more by the market dropping. But it's so funny. Look at all this action. So distributive. They were distributing here. They ran this thing up on no volume. It literally, like that day, look at the highs. Look at that high volume. Like, these are all anomalies. Here was a sell signal, but it went higher. Look at all these anomalies. Boom. So I would look at what? Let's write this down. 124 to 133. Now, again, that's a wide range, but we also know if the market unloads, it's probably going to be irrational. Who knows what exactly the low is? So just please be smart. We're all friends here. No one knows for sure. ExxonMobil, you're welcome. You're welcome. Everybody was just like, man, you're crazy for shorting this, man. You're absolutely crazy. No, you're absolutely crazy for not taking profits. We talked about muscle memory. Said anywhere, I mean, I thought 95 was the great entry. It got even better when we got able to short it at 103, and it got up to 104. Whatever. You know, don't need to be perfect. Now it's coming down. How low? I would think somewhere in the 70s and 60s would be the first main target. Let's get into some oil. UNG, we talked about this. Wow, natural gas leading oil down, broke the channel. I mean, this thing it pops and it flops every time. Someone's selling, and again, I'm telling you, it's coming to the oil patch. It's coming to the oil patch if it's not already there. Let's go through some of these extra oil names. Oh man, so many people were saying, oh, you can't short channel highs. It's like, okie dokie, boom. Now you're at channel lows, down 40 something points. It's probably going to break and go lower. 200 day. EQT. This thing, again, there's so many of these companies that are just dog crap. And here's what Drew and I were talking about again, maybe potential head and shoulders. And oops, oh no. Some sort of, oh, man, I'm just way out of whack. Some sort of a head and shoulders pattern. I mean, it's possible, but also remember, it is a blow off top. And it could just be boom, or it could just go boom. There's your two scenarios. Now, again, if you try to sell me on higher highs coming in a bear market, I'm going to laugh at you. And and not in a mean way. Just that's like your kid coming up to you and be like, I want to fly. Okay, and I want $1 billion. Like, it's just not going to show up. It's not going to happen. So here are the two scenarios: head and shoulders or continuation blowout. Because again, where did this company come from? $4 to 50. I don't even know how to say. Bang, here we go. Here's another one. Retail favorite. All running into the channel highs. Boom, going lower. Now, let's check out the channel low. I apologize, it's not drawn. Somewhere in the hundo. Somewhere in the hundo level. We'll just be aware. Again, Valero. I mean, I was making fun of people because they're paying 27 times earnings, a company that has a margin of paper thin. Look at this action. It got literally back to the old monthly trend line. You're welcome if you actually traded that. Booyah. Drop down. Now what? Man, look at all this volume. So distributive. People just like, get me out. I don't care. We ran this thing up. I got to go. Downside. I mean, I don't know. Let's draw the fibs. Let's go to the fibs. Here's the start of the move. Here's the end. And if they line up, oh God. You got to love when the algorithm and the fibs line up to channels and all sorts of fun stuff. Look at that. 75. There you go. Cut in half. That's what I'm talking about. I'm talking about, again, XOP, cut in half. USO down 30, 40%. That's a great trade. Again, because I don't think you're going to get 30, 40% down in tech near term. Anyway, I hope this kind of stuff helps. I mean, I appreciate everybody. Again, I always say I love you guys for all your, support. And anybody, again, who people were talking about buying the XLF. I'm like, no, banks own all of the problems. Now, again, I can see why you might think it bounces here. It's legit, but bear markets, banks get beaten. Talk to you guys and gals later. Peace.
Hey, thanks for watching. If you have any questions, stop by the Discord room. A link is in the description below. Also, if you'd like to help support more free content, the PayPal link is in the description as well. I appreciate your continued support of the channel.